Hi everyone, we are students of AFW 369, Security Investment and Portfolio Management, and now we want to present about our investment portfolio report. Let's begin! This is our group members. First, our leader, Muhammad Talha. Second, Muhammad Amir Mukri. Third, is me, Najib Ardina. And the last one is Nur Hamiza Sofia. Hello everyone, my name is Najib Ardina. So let's begin with introduction. First one in introduction is investment process. First step, define investment objective and risk tolerance. Secondly, conduct investment research. And thirdly, select stock. For this report, 3 stocks were selected that mix of industries including property, plantation and energy sectors. Last one is construct portfolio. Second in introduction is about our client. He has long-term investment, medium for his time horizon, and risk tolerance respectively. He has technically intensive in his investment knowledge, and his objective for this investment is one a good income generation as a long-term investor. And his investment amount is 100,000. There are 3 companies who were selected for this investment report, which are Tangko Holding Berhad, Highland Corporation Berhad, and Ocean Vantages Holdings Berhad. Okay, next, we move to the global and regional analysis. First of all, let me see overview of stocks. First, Tangko. Tangko is one of the major players in property sector and has established a quality construction and sustainable design techniques. Second, Harlan is in plantation sector that plays in promoting responsible and eco-friendly agribusiness. And the last one is OVH, is in energy sector that generating electricity using sustainable resources. Move to the global analysis that influence all the 3 sectors. For property sector, there are 3 factors that be a main player, which are global economic slowdown, that rising interest rate in economic had dampened risky asset. Second, geopolitical tension, and the last one is domestic demand. On the other hand, there are also 3 factors that be a player in plantation sector. First, global commodity prices. For example, fluctuation in palm oil prices influenced by factors like global demand and others. Secondly, labor shortages that potentially impacting productivity and cost structures. Thirdly, sustainability concerns as growing international focus on environmental and social may have influenced investor sentiment towards Malaysian plantation companies. Last sector is energy sector. In global energy prices factor, fluctuation in oil and gas prices has influenced by one of the factors called geopolitical tensions. Secondly, increasing global and domestic focus on renewable energy transition may have affected in investor sentiment towards traditional energy companies in Malaysia. And the last one is rising energy consumption within Malaysia, driven by economic growth and industrial activity, provided some support for the energy sector. For this slide, we will find out about the current state of the global economy for the 3 sectors. First, property sector. Due to rising of interest rate and inflationary, global property market experienced a gradual slowdown, while in US and Europe shows decline in housing prices. In Malaysia, show relative resilience, especially in Penang. Next, plantation sector. Despite rising production, the palm oil market remained volatile, while some analysts predicted increased demand in the coming months due to festive seasons. For Malaysian, plantation players were generally favored due to strong positioning in market. Last sector, energy sector. The crude oil process remained elevated, and Malaysian energy companies were encouraged to prepare for sustainable financing opportunities. Next, focus on the stock market performing in different regions to all 3 sectors. Property sector, there are 3 regions under this sector, which are Asia that shows mixed performance, included Singapore, Hong Kong, China and India. In Europe, face headwinds in UK and Germany, and in US still remain resilient due to strong demand. For plantation sector, as we can see, there are Southeast Asia shows strong gains for plantation stock in Malaysia and Indonesia. In Latin America, Brazilian soybeans prices rose due to dry weather in South America, and in Africa shows mixed performance when focused on cocoa and coffee. Under global energy sector, it's boom due to the ongoing Russia and Ukraine war, while in North America, US and Canadian energy stock outperform. In Europe, energy companies face challenges due to their dependence on Russian gas supplies. Okay, last but not least, for my presentation part is regional analysis. Now we focus to how GDP, market trend, and employment trend of Asian infrastructure, property, plantation, and energy sector. Firstly, lower regional demand for exports impact certain segments like industrial property, but domestic consumption help cushion the decline. For market trend, regional market volatility lead to some foreign investor pullback from Malaysian property stocks. However, domestic investor remain active, particularly in housing segment. On the other hand, for employment trends, it stated that stable Asian employment contributed to the continued demand for residential property in Malaysia. Next, in plantation sector, slowdown in Asian economies translated to reduced demand for palm oil, a key Malaysian plantation export, and it's lead to lower palm oil prices. While the volatile market conditions lead to increased risk aversion within the plantation sector, resulting in decreased stock valuation for market trend perspective. After that, the stable employment in Asian countries help to maintain domestic demand for palm oil derived products and providing some support for the plantation sector. Last one is energy sector. The slower Asian economic growth resulted in lower energy demand from the region, impacting Malaysian energy exports. Furthermore, the volatile market environment and concerns about global energy security lead to increased volatility in Malaysian energy stocks. And for employment trend, it shows that the stable employment trend in Asia maintain demand for energy products. Thank you. That's all from me, Najwa Idila. I will pass to the next presenter.
Thank you, Najwa. Now we'll be discussing the economic landscape in Malaysia and how it impacts three key companies like Tenco, Hanlian, and OVH. Let's dive into the key economic indicators that play a crucial role in shaping the performance of these businesses. Starting with gross domestic product, GDP growth. Malaysia's economy exceeded remarkable performance in the third quarter of 2023 with a growth rate of 7.2%. This means more people might buy from Tenco, Hanlian, and OVH because the market is more stronger than before. Now let's talk about the inflation rate. A moderate increase in inflation can make things more expensive. When prices go up a bit, Tenco, Hanlian, and OVH can make more money by adjusting prices. But they need to be careful, not to raise price too quickly or people might buy less from them. Moving on to the unemployment level. An increase in employment rates is a positive sign for Tenco and Hanlian. More jobs and more spending money are good for Tenco and Hanlian. When the unemployment rate is low, it means more people have jobs and are likely to buy more property and goods. To sum up, a strong economy, smart pricing, adjustment, and low unemployment are good for Tenco, Hanlian, and OVH to do well in their business. Now, we'll be examining the impact of the Malaysian Ringgit recent movement and how the currency changes may influence the operation and financial performance. Starting with Tenco, the Malaysian Ringgit strengthened by 3.5% against the US dollar from August to October 2023. This could be positive for Tenco as it might attract more foreign investment in Malaysian property, potentially driving up housing prices. However, Tenco's overseas operation may face challenges with increased production costs, affecting competitiveness and exports. Now, let's turn our attention to Hanlian. The stronger Malaysian Ringgit could be beneficial for plantation firms like Hanlian by lowering input costs for imported fertilizers and machinery. Yet, there's a potential drawback as it might impact the company's global competitiveness. Hanlian might find it challenging to maintain competitive export prices, which could affect its overall revenue. Moving on to OVH. A stronger Malaysian Ringgit may be advantageous for oil and gas businesses like OVH. This could lead to reduced expenses on equipment and technology imports, ultimately boosting profits. However, there's a downside to consider. The stronger Malaysian Ringgit might lead to lower domestic fuel prices, impacting OVH earnings from local sales. To summarize, the Malaysian Ringgit movement have varying implications for these companies. While Tenco may benefit from increased foreign investment, Hanlian might face challenging in maintaining global competitiveness. OVH, on the other hand, could experience cost saving but might need to navigate potential impact on domestic sales.
Thank you, Amit. I am Sophia. I will continue the next slide. Malaysia Technology and Innovative Affect Energy Plantation and Property. August to October 2023 affected Tenco, Hanlian Oil, and OVH. Tenco and Malaysia property rose in 2023. The residential property market regained 22.4% value and 22.6% value in 2022 as the economy stabilized. Digital connective and data governance may have caused the rise. Next, innovation and technology benefited Hanlian. Big plantation company of conglomerates reported founded Hanlian for raw resources. Genus led plantation like Harley may have benefit from advance. Finally, the July 2023 National Energy Transition Roadmap awaited OVH. This strategy occurred Malaysia energy chains which may influence energy corporation. The plan extremely large-scale fossil fuel to high-value pre-economic energy transition, self-driving automobiles, and transfer electricity. Malaysia Banking and Financial System can handle sure and continue payment, reassignment, and money intermediation. December 2023, banking system capital ratio was at 10.8% with 134.8 billion ringgit buffer. First half of 2023, financial stability review by Bandar Negara Malaysia shows strong banking sector. Stable plan boost property lending and investment help Tenco. Industry loan were predicted to rise 4.2% in 2023. Next, financial stability benefit Harley and the plantation. The financial stability review for the first half of 2022 found that non-resident bulk domestic share, particularly in financial survey and agriculture for the first time in 4 years. The strong financial system helped Harley and plantation. Finally, the July 2023 National Energy Transition Roadmap impact OVH and energy. The approach has the Malaysia energy transformation, which may affect energy companies, energy industry loan and investment may benefit from stable bank facilitation changeover. Thank you. I will pass the net presenter.
Thank you, Sophia. For my part, I will discuss more on industry and company stock analysis for the three industry, which is property, plantations, and energy. Let's look at the first company, Tenco Holding Berhad, which is representations of property. For performance and trend, Tenco share price rose by 8.2% from August to October 2023. So these outperformed compared to FTSE Bursa Malaysia Property Index, which is rose by 6.4% during the same periods. So we might be stopped because fundamentally the company maintained a healthy balance sheet with a low debt and positive cash flow. The technical analysis shows that the company constitutes symmetrical triangle patterns and bullish trend for 10 months. But the outlook, Tenco Holding performance depends on several factors including e-commerce and supply chains. So the continued expansions of e-commerce and supply chains will drive demand for industrial needs. Next is the Harlan Corporation Berhad, which is plantation industry. For the performance and trends, Harlan share price experienced an upward trend and outperformed the overall plantation sector but to a lesser extent. Reason we buy this stock is because we aim to diversify our investments to reduce the impact of profit fluctuations. For the technical analysis, the Harlan is exhibiting a strong bullish trend. So the stock have demonstrates upward momentum and bullish indication from moving average and RSI indicator. For the outlook in terms of the government policy, regulatory changes of the tax policy within the palm oil sector certainly can impact Harlan operations and profitability. The last company is Ocean Vintage Berhad, which is represent the energy industry. For the performance, the company share price experienced significant uptrend and outperformed the overall energy sector by 7.05%. Reason for selecting OVH is because the company has a strong management, as OVH have a team with extensive experience in energy sector, which could inspire investor confidence in its ability to navigate challenging market conditions. But the outlook of the exploration successful discovery and developments of the new oil and gas reserve will significantly can boost overall or OVH group revenue and stock price. Next, we will touch in detail about the technical analysis in regards of property industry. Example in this scenario is Tenco Holding Berhad. According to this figure, the support level here is RM 0.535. So the stock price has bounced off this level for the 4th time in the past. So it likely to act as support again. The stock price broke out of consolidation pattern in October and has been making higher high and higher low. So it constitutes symmetrical triangle patterns and we expecting it break the resistance level. Overall, the technical analysis for Tenco Holding Berhad is bullish. The stock price is trending upwards. The RSI is oversold, which is below 50. That's all for our groups. Thank you for your time and attention to us and have a nice day. Bye bye.